Hello guys, good morning. Today is Sunday. This video is about money management in your account. I know some people, they neglect, especially beginners, the most important thing in trading is how to manage your money in your account. Some people think that you have only a strategy that works and you just to begin trading. You can't make the money like that. Even if you have a good strategy and you don't have, in this strategy there is no good management of your money in your account, you will lose money. And you make your account at risk. These things that I'm exposing to you and I'm explaining to you, these are advanced things. That's why I want just to open your mind on things that you can't by yourself see. Even if you trade 1 year, 2 years, 3 years, and you begin to see some money, but still you see that there is something that you don't understand and that affect your trades, although it has nothing to do with trades. Money management has nothing to do with the market or where to buy stocks or which industry or whatever or how many. It has nothing to do with that. It has to do with what we will do in your account. How to trade, how to trade, how to take money from your account into positions. Okay, and this is what we call, you see it in some videos online, position trading. It means you say to yourself, how much I can buy from this stock and in my account. Now, there is no, in trading, there is no specific rule always, but there are guidelines. These guidelines helps you establish your trading strategy. Okay, so what is it? Now I will give you, in order to understand this idea of money management, I will try to give you two examples, two scenarios where you buy a stock and try to see how it will affect your money. Okay, now let's say, just an example, you have $100,000. Just an example. You can put 10,000 and you do the calculation. For me, I take an account like this. At least it's very clean and you can understand the idea. And then you apply it on any account. Either you have $1,000, you have $5,000, 10,000, 20,000, 50,000, wherever you have. But when I give you like a big number, it's just to make it easy for you to understand the idea, and then you can apply it on your account if you want. Now, let's say you find one stock which is $100 and you want to buy this stock because this stock you see and you say there is a momentum, there is a signal, or there is whatever is your strategy. Okay, and you say to yourself, if I buy this stock, it could be my biggest winners in history of my trading. This is what you think. Okay, you buy 1,000 shares. You buy all your money from your account. All 1,000 shares, $100,000, 1,000 shares is $100,000. All your money. Okay, but today, tomorrow, something happened. There is bad earnings, bad news to the company, and the price was 100. Tomorrow is $50 only. So you will see your account from going down from 100,000. You will see in red 50,000 has gone from your account. Is it your mistake or is it the market mistake? Ask yourself. Maybe you have done this before. Maybe you have done this before. Okay? And you say, oh, is the market maker. It's the manipulation of the market. And you begin to blame others. Don't blame others because it's you. It's you the problem in failing, in doing mistakes. These mistakes cost you a lot. Why? You don't know. Either you don't know or you are stubborn. These two things. You don't know is easier than when you are stubborn. And you think that you are the best trader in the world, and you do whatever you want, and you lose money, and you are stubborn, and you just lose your money, you lose your money, until you shut the account, and then you go to your friends and become crying and whining, and they say, oh, the Wall Street guys has taken my money, there is manipulation in the market, I don't know who is this guru who take my money, and you begin blaming and whining and doing some stuff like a girlish thing, you know. Try to be a man or be a woman and do business. Okay, do business. Don't play with your money. You save your money for many years, and you want to begin a risky business like trading, and then you begin to gamble and play with your money. Okay, those who short the stock and take your money, they are very happy right now. They take your $50,000. They are very happy, and you are crying. Because you let them do this. I will give you an alternative, a way to do business, which is less riskier. You can't avoid these things. This is the one thing. If there is a bad earnings and there is a gap down, it means the price has gone down too much. You can't make anything to stop it. Okay, you can't. Because you buy at night, you can do nothing. In the morning, you find that there is a gap down, okay? You can do nothing. So what's the solution to these kind of problems? It can happen at any trade. That's why the market is unpredictable. You don't know what tomorrow will do. Sometimes it gives you good news, sometimes it gives you bad news. So what you should do is this. Try, in money management, try to divide your account into many parts. I don't tell you how many parts because there is no rule. The more positions that you have, okay, the less risk you have. This is the rule. I give you the rule for free. I don't care. I have given too much in my channel, but you know, a lot of people they send me emails, private emails. They say, oh, I have lost the gap down. What should I do? What should I do? Okay, I make a video for this. At least if you want to correct your mistakes, it's time. I know that one of you guys, or many of you, because it happens to me, it happens to you, it happens to everyone. The gap down, you can't stop it. The gap up is good for us, that's why you like it. And you say, oh, hope all my trades will have gap up. Yes, but sometimes it happens the opposite. Okay? Now, the one thing I tell you about money management is what you should do. You divide your money into many parts. Like, for example, you have $100,000 in the market, in the account. Each trade, you should not exceed, like, for example, 20,000. Like you divide your money onto 5 positions. You can do more. You can do 10 positions. You can $10,000 for each stock. Now, this in terms of reward, you will have less reward, but you will have less risk in your account. And this is one of the best thing you can do in your account. At least you can stay longer in trading, many years trading, and you don't lose all your money. This is when you don't have strategy and you are beginning and you don't know how to do the business. Okay? And if you have a strategy, or if you get taught by someone who is trading and like this, and then you change, your things change. Another thing that you can do is look at the earning dates. It's very easy. You want to buy stock, go to Yahoo Finance and check where is the earning dates for this stock, and check. Let's say it is tomorrow, so you buy today and tomorrow earnings, but you don't know if it's go up or go. are you okay to risk too much money? If you are okay to risk too much money, you say, okay, this last year, all the quarters is going up, so I think that this will go up, so I am with it. If it goes up, I have too much money. If it goes down, I risk. You should always calculate what you are doing. That's why I always say to you, trading is math. Always calculate things. Always, wherever you want to do. Okay? If you do mistake in calculation, you don't know what you are doing, you will fail at the end of the year and you will not have much money, or you lose too much money from your account. That's why, here when you say math, I'm not speaking about, someone told me, oh, are you a PhD in math? No, I'm not speaking about math, about equation, about this stuff. I'm speaking about calculation, which is primitive math. Primitive. If you are in kindergarten or elementary school, you have a son or you have brother or sister, and you tell her, if I give you $20, because you know the kids now, they know how to calculate everything, and if I take $2 from your money, you lose it or no? She will tell, yes, I lose $2 because I have 20, you take 2, so I have only 18, so you took my money, so I'm losing. Now, you find a trader who is old, who is 40, 30, 60, and he buys stock with 20, it goes to 18, and he stays. The market has taken his money, and he stays. So, the logic that these guys have in their mind, a person who is a girl or a boy in elementary school, they have more logic than you. So this guy who is like elementary school, if you teach him how to trade, he will be better than someone who is 60 or 70 or 40 or 30 or 20. Why? Because it's logic. He sees something in his hand. He sees $20. You take $2. He knows that he loses $2. He say, Dad, give me my $2 because I lose money. He knows. How can you don't know? Now, this is just to explain the logic. If you don't have logic, you can't make it in trading. I'm telling you from now, if you are beginning to trade or something, if you're not logical, okay? If you're just a guy who is dreaming or a woman who's dreaming, you have $1,000 and you go to a website, or you go to someone else and he tells you, okay, take my training, this 1,000, believe me, it will become $1 million next year. Okay? If it is like this, I will give him $100,000, $200,000. I say, okay, just give me double. I don't want to be a billionaire. Just double it. They can't. They just talk. Okay? They talk because they can't. They can't control the market. They can't control this performance. That's why they sell you a dream. You follow the dream, you are gambling. When you are gambling, you will never make it. Okay? So, you divide your account into 5 positions. No, I say 5. You can put it 3, you can put it 4, you can put 6, you can put it 10. This depends on how are you very, very conservative, or are you you want more risk. If you want more risk, you can divide your position into 2 or 3. You want more risk, but you can have more reward. Okay, if the stock goes good, from 100 it goes to 120, 130, you see big money in your account. Okay, but if it's opposite of that, you see that big chunk of money is going out from your account. So this is the 2 things I tell you. Either you should first divide your account into many positions. It doesn't mean that you buy all your money 5 positions at the same time. No, when you want to buy a position, a stock, buy only 1/5. For example, you have, let's say you have $10,000. You want to make this $10,000. Let's say you divide it into 4 positions. Okay, 4 positions, $2,500. This is 1 position. You buy a stock, and you leave this $7,500 for other trades. It doesn't mean that you buy all, but all always don't buy with all your money in one position. You can do that, you can, and the reward is good, but the risk is too much. And if you continue buying always with the whole money, you are at risk of losing a big chunk. When, for example, you put 10,000 and next morning there's bad earnings and you get hit with 50% and you have 5,000, it's too much money. 5,000 in a day you lose. That is too much. Okay, try to think about it. Don't say it's the market, it's you. The market is always doing gap ups, gap downs, stock going up, go down. So it's you who will maintain your account and with a good strategy. It's you, it's no one else. Don't play the market. All the problems of your trading, it's you. That's why you should correct your mistakes. It is as easy as that. If you don't want to correct mistakes, what will happen to you? You begin to lose money, and then you shut down your account in 1 year or two. This is what happened to all the beginners. Few of them succeed and go to intermediate level. They have a few problems, to solve, but they are okay. They can make 5%, 10%, 20%, 50%. They can make it, but they are still doing mistakes. But they don't know what are these mistakes. Okay, so you should learn, and trading is a learning process. It means it doesn't mean that when you learn one strategy, you say it's enough. Okay, I know everything, and no, because the market gives you opportunities from many sides, and the market is so big, so many stocks. The stocks are not, they are different. They are different in each. Some stocks you behave like this, some other stocks like behave like this. So you should study them. Study the stocks, not the companies. You should study the price. I'm not speaking about the companies. Whenever you go to the company, you find nothing. Okay, you find a company. It is a well-known company, old company. Okay, it is there. It is making money. But when you look at the stock, it stagnates. It doesn't move. It's more 1 year or two. It means $10, $5, and go this, go up, go down. What do you do with this company? Because the CEO of this company is making $1 million, $2 million a year, and you have bonuses. It's good, but for you, if the stock you stay 1 year in investing and it goes from 50 to 52 or 53 in 1 year, you are wasting your time with these old things, old companies, old people, old things. You should go with something that it is strong. Okay? There are stocks that are so strong. 30, it goes to 60 in 2 weeks. It double the money. You double your money. This is what I am looking for, and some swing traders are looking for. We are looking for strong stocks. That mutual fund comes to these stocks and buy. When they buy, we see it in the price. I have a way to find out. Okay, when I find out, I just buy and wait. That's why I say, buy the stock, put stop loss, and lay back. Relax. Let the money come to you. That's it. When you have enough money, and the stock hits your stop loss, you just exit with a nice profit. Okay, don't exit with $50, $20 in my hand, $1, and you say to me, "Oh, I have profit! I sold my shares. I said half of my shares. I have $50, man. What do you do with $50? If you go to a movie theater, you invite one of your friends, you can just spend this $50 without eating. Just going to a movie and with a soda and popcorn. So what's this $50 that you are speaking about? Okay, try to wake up and try to wake up from your sleeping. You are sleeping. You are trading, but you are sleeping. You don't know what's going on in the market. Okay? Even if you have... sometimes someone told me, "Oh, we don't have that much money." Okay. I do just an example. I buy stock. This is volatile, like this, small. $3,000. Okay? In 2 weeks, I get 1,000. I get 33%. Okay. 1,000 from 3,000 is good. You have money. But you get $50 and you begin to speak about this $50. I have $50. I make a profit and make a profit. And then the next trade, you lose $200. So what's this trading that you are? Where are you going? You are going what you call a dead end. There is a street, but you see that it is a dead end, and there is a big sign. It says dead end. It means you are driving and you go, you find nothing. The street stops and you find the forest. Okay? So this is the video about. I repeat just a thing, and if you you can repeat my video twice if you want, just to put notes and to write. I say if you have an account, let's say $10,000, you can put 4 positions to $2,500, or 3 positions as you like. Or if you make more, you have less reward and less risk. If you put only one, you buy one stock with $10,000, this is all your account. You are doing trading with a big risk. Understand that it is a big risk. Don't say, oh no, this stock will never go under this price. You bought it, for example, 20, and you say this stock has never gone beyond 18. Never. I have seen the chart. Okay, but next day you have a bad earnings and it goes to 10. From 20 it goes to 10. What did you say? There is no sure thing. So in trading you should be equipped with risk alert. It means you should be always calculating what will happen. The bad thing, the good thing. The good thing, if it happens, is good for you, so you don't think that much about it. But the bad thing, you should think it before you do the trade. Okay? That's it. And I told you second thing that you should do, if you don't want gap up or gap down, okay, you don't want that much risk, you go to Yahoo Finance or to any other website and you check earning dates. They give you the earning dates if it is in the morning, if it is in the day, or it's after the market, or before the market opens. They say to you. So you just see the stock. Okay, the earning dates is after the close. So you understand that you buy after the close. They announce the earnings. If it is good, the stock will go up, and there is a gap up in the morning most of the time. Now, if the news are bad for the company, in the morning you find a gap down and you lose too much money. Sometimes you make too much money. I have seen a stock that it was 50. Next day it is 250, 500%. Okay? 500%. Believe it or not, there are a lot of examples. And this stock is big. It was $50, but it goes to 250 in one night. Why? Because this is maybe it's I think it's pharmacy company, and it has a new product, a new medicine that revolutionized a lot of things. It's a new thing, and all the people was waiting for this product. Okay, that's why the people, they buy too much and they make too much money. Okay, so thank you very much for this viewing my video. If you have any comment, as usual, write a comment, thumb it up, subscribe if you haven't before, and write me a private message from YouTube and tell me what you want about this subject. Okay, thank you very much and have a nice day.